We've been going on our series about financial control and the three basic elements: tracking, predicting, and comparing. We're going to move on to number 3 now, so let's get straight into it. Welcome back to the Basics of Business channel, everybody. I know we've been going through the 3 key elements of financial control: tracking what's going on, spending time doing that, predicting what's going on. Now move on to number 3, comparing. And we're going to go through a spreadsheet to show you to practically do it. But in terms of why are we bothering comparing what's going on? What's the value to us?
The main value is actually to make you understand what's going on in the business compared to what you expected to happen or what you thought was going to happen, which will then mean you'll be better able to predict in the future. Sure. So, and twofold that is. So one is, let's say we predicted this amount of sales this month, and we tracked what actually happened. We now compare what happened to what we expected. What does that mean to me, in as much as, am I going to have as much cash as I expected? Am I going to be as profitable as I expected? Can I pay myself my wages, my bonus, my dividends as expected? So you'd have that in the sort of the impact of the comparison, but that would then allow you to go, well, actually, the sales were double what I expected because of X, Y, and Z. So therefore, what am I expecting to happen next month or the month after? So you would get better at forecasting if you understand what's going on in the business now.
So we're not, I know, into like Excel and doing lots of numbers, we're not just doing it for the sake of it. It is a key business purpose in terms of to make better decisions based on real data of what you're doing, so that you can have a better business and continue to make ever better decisions to ideally keep growing it.
Yeah, and I've worked with people who, you produce the month-end reports and they just put them in the drawer. They don't really look at them or whatever. What we're trying to do here is not just have the academic thing of you must have a profit and loss account, you must have a balance sheet and a cash flow forecast or whatever. We have those documents and they need to be used by the management so that they can improve business decisions and become even more profitable. So even if you've got a really successful business, you still want to know where you're making money, where you're not making money, how can you make it even better. These are practical documents, practical information that all business owners, all business managers should be looking at.
It's almost when it is successful, that tendency when the complacency can come in and you start to go, oh, well, just the money's coming in, it's great, it's all fantastic. But without looking at, you might not see that, oh, geez, that last campaign didn't go so well. There's 2 or 3 in a row that have not done so well. That product line that has been our sort of holding us up is starting to tail off. That's where, unless you keep doing it and keep comparing, keep predicting, you're going to miss that.
Yeah, absolutely. It's a vital thing of, it's no point just, we've said about tracking and predicting. There's no point just having a bookkeeper filling in the spreadsheets. There's a requirement, on our videos that we've done before, there's a sort of compliance aspect to bookkeeping and accounting and recording that you have to do it because it's a requirement of the Companies Act or the VAT man or the tax man or whatever. So there's that compliance side. But actually, the positive thing is, how can you use that information to make better decisions and predict what's going on in the future? And there's a model that I've seen people use before, which is the 3 whats. What happened? So what now? Yeah. And I think that that is quite a good way of thinking about it. Well, what happened? Well, so what? Our sales were better than expected, less than expected. One of our customers is going to pay us later, or so what? We're going to have more cash, less cash. This is going to happen. What now? On the basis that I've now got that information, am I going to do something different? And I think that would be one of the things, when you are tracking data, there can be certain things that you can say, well, that's interesting. No, that's quite fun to know, or whatever. But actually, are you going to use that information to make your business better? And that is why you should be doing it. And I think P&L and cash flows and things, there is certain financial information that you just have to know. You have to be on top of to be able to make the right decisions or the better
And that's
decisions.
a great point in terms of the data that you're tracking. So you might start tracking stuff, and I keep thinking of myself, weighing the pig doesn't make it fatter, as in you can have all this data tracking. However, if it doesn't tell you key things that then lets you make key decisions to grow the business, stop tracking it and track something else.
Absolutely. Absolutely.
And it's almost where that compliance element turns people off the value of what you get from this. And that's the whole point of doing it beyond compliance, is if you got to do it, take advantage of it.
Absolutely. Yeah, absolutely.
So as I say, we'll build in this spreadsheet, we'll make it downloadable, we'll put the link in the description. Let's go in practically to see how this would work and through the spreadsheet, and let's get it straight into it now.
Right, so this is the spreadsheet that we put together. It's sort of probably the starting point for most financial reporting will be the historic profit and loss account. Yeah, I think everyone thinks they understand it, and most people probably do. But it's the first thing everyone wants to know. Am I making a profit or not? That's the starting point. There's lots of other information that people should be tracking and whatever, but that would be the first thing. Is my business profitable? So this is a fairly standard layout that people would use, and I'm just going to quickly run through it and then talk about additional things.
And this is building on the stuff that we've done previously until we've built our P&L. This is now just taking it forward to let us compare it against actual.
Yeah, so, as we've said before, you could just have one line, total revenue. You could have just all your costs. So you would know total revenue, less my costs, that was my profit or loss. But what I've done here is just put in some extra lines. So the way that you would have it set up is what actually happens. So you've been recording it on the spreadsheets, or you've got something in Sage, Xero, QuickBooks, whichever one it might be, and you want to now record what actually happened. So I've got here revenue line 1, 2, 3, 4. Again, as we've said before, only track it if it's going to be useful. So that might be a different type of service. It might be geographical. Whatever you think will help you make decisions. And so you've predicted revenue 1 was going to do £4,000 in April 24. And what did it actually happen? Then you would be saying my variance. So I haven't put any figures in. So my variance there, but let's say we did 3,800 there, and we did 4,200 there. That one we were spot on, and that one we were ahead. Okay, so there we can see we've got the variance and we've got the percentage variance, and I think it's important to have a look at both of those on the basis that it's only £200 and it's only 5%, so you may not bother focusing on that.
Yeah.
Whereas actually, and likewise, if this was £60,000 to £42,000, it would be it's still only 10% off, but it's £18,000 difference. So that again would be helping you decide where to focus, because why is revenue 10% down? What can we do about what happened? We did £4,200. So what? Well, we're not doing as well as we expected. Think now what? Well, what am I going to do? Is it my marketing? Is it the advertising? Is there something else that I could do to try and get that back up? It's
acting on it. It's just don't looking at the numbers and then go, oh, we didn't hit it, and then just keep going. It is using the data to act.
Absolutely.
Act on it.
I've also got on here comparing it to last year. So if once the business has been established, again, a lot of people would be looking at what happened last year what did I forecast, what did actually happen. So again, if I've just put the same numbers in, so in fact you'd say, well, this is what happened last year, so I forecast we were going to do exactly the same, and we haven't. We're actually 1,300 behind where we were last year, which is what I forecast. But it might be that these figures are 10% lower. You forecasted 10% growth, and these numbers are lower, which could be, so you might be looking at it and saying, actually, if these numbers were something else, you'd be looking at that and saying, oh, we didn't hit the forecast, but was I just ambitious in my forecast to expect to go from 3.5 to 4? We didn't hit the forecast, but I was predicting to go from 4 to 6. Why was I predicting that? What did I expect to happen?
Yeah.
And now I can decide, well, what am I going to do? Because my expectation wasn't realised. So my expectation wasn't realised. So, it's that now what bit is the bit that's important. And likewise, you then have all your costs. What did we spend last year in those headings? What did we expect to spend? What did we actually spend? And you'd then have your P&L. So that would be for the month. And then people would you'd have your year to date. So you keep a running forecast of where we are. And these numbers are coming from the P&L that we had on one of our other videos, and April's month 4, so that's why the numbers are different there.
And you can change this into, as particularly as the business gets started, you're probably not going to get this right to begin with. So for example, taking your example there, if that revenue was 60,000 and the rest are much smaller amounts, should we break that down? Because obviously there's something bigger there that we're maybe not tracking in enough detail.
Absolutely. I mean, this is taking the business as a whole, but you might have departments, you might have different, if we take a big business, they might have geographical regions. So they've got a profit and loss account for the UK and a profit and loss account for Europe and a profit and loss account for the rest of the world. Or they might have it by, if you're a restaurateur, you've got 3 restaurants. You're not just going to want to know how all 3 restaurants are doing. You're going to want a P&L for each restaurant. So that would be.
Or if you had a food stall at different venues, you might track it by different venue, etc. See how you're doing.
Yeah, absolutely.
Across different events.
Yeah. So and again, it's all back to, don't do it just for the sake of doing it. Don't do it just because you watched this video and we thought it was a good idea. It's only worth doing if you're going to use the data. And as I say, that this will help you understand what's going on in the business, predict in the short term what the impact of that shortfall there is. With £1,800 less, I'm going to have £1,800 less in the bank as a result of that. But it also then allows me to think, so now I was off that month, what's going to happen in May and June and July? Do I need to reforecast? Do I need to revisit my predictions so that I can be better understanding what's going on in my business, which will then mean I can better predict? Or as we said, actually, no, I don't need to revisit the predictions. I just need to change my marketing, my sales, whatever it might be, that's going to get that back up, which may or may not happen. And next month you'll be looking again at, did those decisions.
So if we're looking at May, we just add another couple of columns in.
Well, generally you wouldn't. You would just look at, most people would look at it in isolation, month on month. You'd have your year to date. There are, again, I like you would actually have another report having the actuals month by month lined up, so you can see January did this, February did that, March, and especially again, just so that you can see are sales going up or down.
But to get started, just doing it almost as a monthly basis is a sort of good bite-sized way to get started, just to work out before taking it any further.
Yeah, if you use Sage or Xero or any of them and you click on the P&L button, this is the sort of report that is going to come up. Likewise, you can go in and on Xero you compare periods, and in Sage there's a month-by-month report. So they're there, they're standard reports, they're what people expect. But obviously it becomes far too unwieldy to have every month comparing it to variance. You know, you're going to have however many columns that is, 6 columns times 12 months. There's too much data really to take in. So usually, as I say, this would be the starting point for most. And as I say, you've got it for the whole business. And if you did have 3 restaurants all in one company, you'd want the whole business. You want to know how the company is doing, but you would then want some form of departmental analysis as well to know which.
But doing a monthly basis also lets you test out your data, what data actually matters to you, to then make better decisions.
Yeah.
You could create, as I say, the fantastic spreadsheet comparing month after month. If you're comparing the wrong stuff, then it's meaningless almost to a degree. Whereas if you do month by month and get better and better at working what tracking, what makes you make better decisions that grows the business, then you can build on it there and create more complicated reports.
Yeah, and there may be certain correlations that you start to see because you're tracking. Oh, month by month, I can see that, you know, when I spend more on marketing, 3 months later, I get an uplift in sales. You know, silly little example, but you know, sort of those are the sorts of things you can see. Or, you know, as the wage, what is your percentage of wages to sales?
Yeah.
Keeping a track of that across the months so that you can see, oh, actually, sales are dipping down and I haven't done anything about the wages yet. I need to, you know, at some point I'm going to have to do something and either get sales up again or reduce that wage cost, or what, you know, whatever the cost may be.
Yeah. So that's our brief run through the spreadsheet. As I say, we'll make it available in the download and on the link in the screen there. Again, we both emphasize, don't just track data for the sake of track it. The reason we're doing this is to make better decisions, to predict better. Compliance is obviously a key aspect of it, but this bit is, I think, where you start to see the value of all that effort you put of tracking and predicting things properly. As I say, let us know in the comments if there's any aspects of the spreadsheet you want us to cover in more detail or add to it. As ever, we wish you every success with your business journey. And you know what to do with those boxes in the screen. And we'll hopefully see you in another video shortly.